Hi, I'm Jeff Fitzpatrick. I want to talk to you about my risk management tool. This is an Excel-based system that will run on most computers. If you need it on a different platform, such as Google, then let me know and I'll send one to you. So, when you open the tool, it looks something like this, a light yellow background with various boxes. The boxes that have maroon-colored writing and words in them are entry boxes that you can fill in. The black script is static. You can't do anything with that. It stays as it is. And the blue, particularly numbers, are calculated values. Again, you can't change them. They are dependent on the inputs that you make. So let's have a quick look at the inputs that you would put into this system. Firstly, along the very top, we've got a place for the account name. In this case, Jeff's Blog Traders. And that's the account that I'm looking at. As I trade several accounts, I need to differentiate between them. Similarly, I've got space to put the date in because I want to save this and compare between different periods of trading. So I'll use a date to differentiate between them. That's straightforward enough. The next entry is the equity in the account. In this case, £5,512.23. Now, I am saying definitely the equity and not the balance. The equity is the amount that you would get if you were to close the account now. The balance can be a bit of a strange figure. It doesn't really reflect reality in many respects. So the next thing we'd input is in the center, halfway down the screen at the moment, and that is open trades. And the way I've designed this at the moment, I'm looking at defending either buy trades, all buy trades, or defending all sell trades. So the entries here, which you see, are only buy trades. Alternatively, if we were defending sell trades, it would be only sell trades. And you can see I put the volume of the trade in. So on the first one, it's 2, the second one, it's 2, the third one, it's 1, and the entry price at which I went into the trade. So 1.55030, 1.54461, and 1.53045. So when I put those characters in, the program automatically calculates an average, and it's a weighted average that takes into account the different volume of the trades. And that average is known within this system as the anchor point. You can see it in blue, 1.54405. So that is the point from which all of the values of the defense levels will be calculated. Now there may be circumstances where you want to not use the weighted average as your anchor point. You want to choose one of your own for some different reason. There's an override anchor point entry facility. Simply put in the price that you want to use as your anchor point into there, and that will then be used for all of the calculations. The figure in blue of number 5 below the anchor point is simply a total of the volumes that would be used for calculations. So that just comes from the 2 plus 2 plus 1. That's the basic information input. What you can also put in is a level of equity risk that you're willing to take. In this case, you can see there's currently a figure of 40% in there, and that you can choose. The default figure I use for most of this is 31%. What that means effectively is that 31%, or in this case 40%, in fact I'll change that back to 31 now. So 31% of the equity I'm prepared to lose in order to defend these trades. Now when I say lose, I'm talking about on a temporary basis. So I'm prepared to allow a negative to appear in the profit and loss area of up to 31% of the equity in the account. I'm not too worried about that because I certainly intend to recover it in due course. So moving on the right hand side, you can see we've got 3 boxes there, A, B and C. These are standard defense schemes that I've input. So if we take scheme A as a first example. The figures there, 200, 250 and 300, each refer to a number of pips away from the anchor point that we are going to place our lines of defense. And they're standard. On A, B and C you can't change them. The percentage figures, so underneath the 200, 250 and 300, we've got 50%, 25% and 25% again. What this means is that we're going to defend 50% of our volume of trades on the first line of defense and 25% on each of the other two. So overall, between these three lines of defense, we will be defending 100% of our trades. On the far right, you can see a figure of £1.31. That's a figure that's been calculated depending on the risk. So for 31% and using that 200, 250, 300, 50% and 225%, I can use £1.31 as a volume per £1,000 of equity in the account. We came across a figure a little earlier which I didn't point out under results. This is this area here of £7.22, and that is actually the maximum collective value to be used for either buy or sell trades. Once we've input all this information, we get a set of results, as can be seen on the bottom left here. And the defensive trades, we've got DB1, DB2, DB3. They're referred to basically defensive area 1, 2 and 3. We get a volume 2.5, 1.25 and 1.25 and a price. And it's at these three volumes and these three prices that we put our lines of defense in. If I switch for a moment to the trading screen, I've actually input these three figures, three lines already, and you can see, get that in scope, that we have three sort of purple lines, 1, 2 and 3 on the screen. They represent the first, second and third lines of defense. You can see that all of those trades are actually currently in profit, which is also very good news. So going back, that's on the standard scheme A. We have a standard scheme B where the 50, 25, 25 stays the same as it does on C, but the number of pips away from the anchor point actually is different. And that means that we are taking slightly less risk overall, and therefore we can have a slightly less money to use as volume for trading. Similarly again, on scheme C, the averages again are such that we're going to be working further away from the anchor point, so therefore the trades have to be smaller, and in this case we can use £1.08 per £1,000 of equity. Scrolling down a bit further again, we've got first of all an example D, and then three schemes D, E and F. On these you have far more flexibility, so you can actually change the number of points away from the anchor that you want to have any of your three defensive points. So for example, at the moment on scheme D, the last defense is at 400. I might think that's a bit high and therefore just change it to 350. Similarly, if I want to change the proportion of the volume that I protect, I can do that. So it could be I went for 25%, and I may just want to protect 75%, so not change it again. On the other hand, I might want a backstop, so I put at the end of it 50%, so that between the three defensive trades, everything is protected. And you'll notice when I did that, the amount per trade that I can use, or per 1,000 of equity, reduced again. Now it's to 99p. And that's it. So basically, you input your trade entry points and volumes into this. You input your equity. You decide on the scheme that you want to use to defend your trades, and then you're given a set of results at which you'll draw some lines onto your trading screen, and you can then set pending orders at those lines so that defenses cut in automatically at the appropriate places. So that's a quick overview of how to use my risk management tool. If you've got any questions, please get in touch. And one last thing I should show you there is to change between schemes. We've currently got A at the bottom. Let's say I want to now go to D, and just put a D in there, and that's it. And at that stage, we get a new set of volumes, a new set of prices. And that's a risk management tool. I'm very happy to send it to you if you haven't already got it. Just email me and get in touch. Thank you for listening.